Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Tuesday morning, we're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant with me, my colleague Surabhi and Nigel. Guys, good morning.
Hi, good morning, guys.
Morning.
Do you call up any of your friends in the US who like to watch Indian movies? I guess the headlines are coming in on the movie business this morning.
Absolutely. I mean, you don't know where he's going to go next, right, Mr. Trump? But I don't know what kind of an impact it'll have. But difficult what he's going to do next.
It's all entertainment.
But it's a festive season, guys.
So,
we're like moving ahead with Navratri. Dussehra is around the corner. So, it's all good.
And today is the expiry, and today marks the end of the halfway mark of the fiscal year. So, hoping for a better second half of the year.
Absolutely.
Yeah. All right, well, let's just take it from the top then, right, in terms of what you need to know as we begin this session. So equities last night in the US higher, but they kind of sort of sold off into close a little bit, paired gains into close. S&P was up about 0.25%, NASDAQ was up about 0.5%. I mean, the big talking point, and it's just a talking point, is, of course, concerns over a US government shutdown, which looks likelier than not, starting the 1st of October. So you had J.D. Vance, the U.S. Vice President, who said that I think we're heading into a shutdown because Democrats won't do the right thing. And, of course, enough commentary from the Democrats saying, well, the Republicans aren't climbing down, piping down. So far, no agreement. Last minute, it's known to happen many times that it gets sort of eventually resolved. The Bureau of Statistics in the U.S. essentially said that it will delay the jobs report, the jobs data, and suspend all operations in the event of a government shutdown. So basically, if you think about how this impacts markets straight up, of course, I mean, it'll have an impact if the government shuts down, people don't get paid, etc. And there have been instances of extended shutdowns as well. The impact is there. But immediately, some of the important data which the market kind of hangs on to, which, for example, is the jobs data, which is up on Friday, will get pushed out, will get delayed if the government shuts down. That was confirmed. Now, US 10-year yield was down about 3 basis points to about 4.14. Dollar index was down about 0.25%. 2 days now, dollar index is, basically it got past 98. We're just under 98 now. So about a 0.4% day before yesterday, 0.25 last night as well. Gold prices continue to climb higher, so above $3,800. Silver, of course, as well, doing very well. And Manisha will talk about both those in a bit from now. And remember, lots of silver ETFs, and we highlighted that towards the last hour as well, all kind of mirroring what's happening with underlying physical gold prices. Oil prices, about a 3.5% drop, back at about 67.7. It was a large drop. And, of course, signals that OPEC Plus will likely raise output once again in November. So after October, perhaps in November, they will see this. They will see an output hike again. So we'll just tie in the levels here. Nifty, of course, could not really hold on to the gains in any respectable way or fashion. The market, of course, started higher, sold off, another attempt, sold off. And towards the end, there was an attempt but did not last. So we ended pretty much where we started at about 24,600 kind of levels. So the support zone, once again, doesn't change. It's 24,400, 24,330. That broadly, this was, by the way, the prior support zone before the market saw that 1,000-point up move. So we're basically back where we started in that sense. The resistance comes in at 24,807 and 24,923. Very near term. 200 points basically on either sides is what we are working with for now. For the Nifty Bank, we need to hold above yesterday's low, which then becomes a bit of a support. 54,226 is that a level. And resistance is the 40 hourly and the 40-day exponential moving averages. So 54,860 is the hourly. And 55,078 is the daily exponential moving average for the Nifty Bank. So not very much has changed as we sort of, pick up from one day to the next. US, India, trade stuff, etc. Absolutely quiet, silence, nothing very much at all. Not very much to go along with in terms of new stuff, new triggers, either up or down. GIFT Nifty will give you a quick sense of how we're likely to start. We'll pick it up from there. So it's quiet there as well, about 8-10 points higher. How's the F&O stuff looking? Nigel is standing by now with exactly that. Nigel, over to you.
Well, important trading session today because you have the September week monthly expiry that will play out. You have the end of the halfway mark of the fiscal. That's the end of the first half of the year. And also you'll have a run-up to the RBI policy as well. So those are the top cues that you'll be tracking. For the Nifty, we're in a 7-session losing streak. Gives you a little bit of that eerie feeling. While the Nifty Bank, the good news is, yesterday at least it broke its losing streak. And the rollovers come up for you on the screen, pretty much in line with averages that we have seen getting into the expiry day. So at around 67%, at around 71%. One positive yesterday was that the broader markets, at least, there was some bit of green and some bit of an outperformance after a few trading sessions. So that's good. I'll keep an eye out on the broader markets because that's what impacts your portfolio. The other good news is that yesterday, the gross volumes actually were very, very high from the DIS perspective. There was some rejig that took place. So that's why that could be the cause out there. But net, you had the institutions that were buyers to the tune of close to around 1,000 crores. So that's positive. The FI selling needs to cool off. That's important because the last week it did spike up. What do the FIs do in the F&O market though? On index futures, they added some short positioning. Short positioning holds at around 84%. On stock futures, there was an element of rolls that we saw. There was some bit of an arbitrage as well. But net, you had some shorts that covered out and there was some long addition as well. And what's going to give some kind of, glimmer of hope to the bulls is that yesterday the FIs actually wrote more puts than calls in trade. And that's after a few trading sessions that we saw that. Remember, the PCR is still at the lower end of the range. Yesterday, it was at around 0.63, 0.65. That's popped up to around 0.7, but still at the lower end of the range. And we're going to get 2 strikes up for you, and both these 2 strikes will be expiring today. So the 24,700 call, the bears believe they have got this covered. At higher levels, they believe that, we are not going to, run away beyond that mark. So that's why that call writing is extremely aggressive. Well, there was some put writing as well, which brings us to the levels. The 24,500 mark is the important mark. You don't want that to get breached on the downside. And with the last many trading sessions, we have been making lower highs. So in that case, this is the reference point for today, 24,791. The Nifty Bank comes up for you on the screen. That's pat in the middle of the 20 as well as the 200 DMA. So you'll want it actually to get closer to around the 20 DMA, which is around 200-300 points away from current levels. If you can get past that, at least the technicals start moving in favor of the largest constituent, that's the Nifty Bank. 2 stocks that we're looking at, Saman Capital. We had highlighted this on Friday. Yesterday, in fact, we did see, the stock moved up on very large volumes. There was a large trade that took place as well. So Saman Capital is one stock that we'll be tracking because it's come into the F&O ban and volumes were absolutely massive. I think they could be raising some funds. The other one is RBL Bank, continues to hold steady and continues to hold on to its form despite of the Nifty Bank getting a little bit jittery. So both these 2 stocks continue to be on my radar.
Okay, well, let's look at cues across Asia as well, and they're fairly mixed, but there are big headlines coming in from China, by the way. First of all, the PMI numbers in China, the official PMI on the manufacturing side, those numbers are looking good. Strongest since March, though it is still in contraction territory. The private sector PMI survey is actually indicating faster than expected expansion. So, data out of China is good, and there's a massive listing in China this morning. A huge gold miner has listed. Listing was in the market to raise more than $3.2 billion, and the shares are surging 60% this morning in Hong Kong. So big moves out of the Chinese markets, but otherwise index level, things are all right. Let's get to the implied open then. Very flat, as you just saw over there. About 9 points up is what the indication is, at least at this point in time. So maybe we get more of the range-bound trade. Let's see. Now, the equity call of the morning, and it's coming in from Rajiv Batra of JP Morgan, who says that despite rising concerns about a potential near-term slowdown in India's growth driven by 50% US tariffs on Indian imports and increased US H-1B visa fees, domestic catalysts such as GST 2.0, lower interest rates, and recent tax cuts could help trigger a recovery in consumption and corporate earnings. He continues to recommend domestic over exporters with an overweight stance on financials, staples, discretionary, materials, utilities, power, defense, and real estate. He says their underweight sectors remain IT and pharma. So fully, enthusiastic about the local stories here in India. Well, let's, welcome in our first guest on the show. Rahul Chadha, founder and chief investment officer at Shikara Investments, joins in. Rahul, great to have you with us. Exactly that. Let's take that debate forward. The note that I was reading out from JP Morgan, right? Whether the domestic measures that we've seen, whether there will be enough to inspire a real meaningful pickup in earnings. And we also have the policy tomorrow, so weigh in on that as well. I mean, whether you're expecting more monetary easing as well. And does it all lead to sustained double-digit earnings growth?
Yes, I think that is the big question for markets. That look, some bit of a tailwind is expected from these GST cuts, the rate cuts, and the tax cuts which has happened. There is a repair of household balance sheet which is going on, so it is expected that next 3-6 months should be good. I think the bigger question for India is what is happening in terms of the white collar job disruption because of AI. We've seen the IT services companies do a fair bit of a cuts here. One is kind of looking at whether some of these GCCs look to kind of slow down their hiring because of AI-led productivity gains, etc. So I think those things are on minds of investors. And while this is happening is North Asia, particularly Korea, Taiwan, and China, they have a strong AI story in terms of the AI enablers. They have the AI infrastructure or AI adopter companies they have, and valuation is cheaper. And it's but natural for market participants to currently kind of overweight those markets over India.
But what are you liking in India, Rahul, at this point in time?
So again, our view is over the next 6-9 months, you will have opportunities come in India. One would look at banks selectively. Look, if the nominal growth remains slightly lower than before, obviously banks will do well, but not like the way they did in the past. I think selectively autos present an opportunity on back of these GST cuts and affordability coming through. We've continued to like the discretionary consumption, the consumer platforms, something like a Zomato, Nykaa, etc. And we continue to like that. Travel and tourism is a theme which took a breather because of the border skirmish. I think that comes back around Q4.
Rahul, hi, good morning. Good to have you here. Travel, tourism, so the hotel guys or airlines or even, for example, OTAs. Ixigo has been such a big mover. Make My Trip is the big one, but it's in the US. But, I've heard they've kind of sort of... not happy with the valuation they're getting there, so maybe trying to make their work through here. But what's your sense, Rahul, on the travel side?
It's a combination. Yeah? It's a combination of airlines, which is Indigo, hotels, some of the select hotel names, etc., and then OTAs, which includes a mix of both Make My Trip and Ixigo. Both of these are fantastic companies, and again, I think they just kind of touched the tip of that iceberg in terms of the customers they can mine. And as we saw with the C-Trip in China, the numbers are going to increase in the coming years.
Hi, Rahul. Good to see you in. I remember you liked the quick commerce players as well in our chats earlier. Some of them have done very, very well. Do you think there's still a big runway for them? Because, you've got good returns as it is in the last 3-4 months from the time we last spoke. You've indicated that things should look up from here on. You think there's still a long runway?
Yeah, no, we've liked the internet platforms across the Asian region, and India, you play those internet platforms through the quick commerce place. What's happening with these some of the leading quick commerce plays is that competitive intensity has somewhat abated. You can see better response from their dark stores in the top 50 cities, etc. So you'll see that operating leverage play out. And remember, these guys did well when the economy wasn't really doing that well. And now with the tailwinds coming in the economy, they should do even better. So we'll continue to like these names. These are the names which have wide TAM in terms of gaining share in the grocery segment, and they will continue to do well.
So in the financials, Rahul, what's the play?
Yeah. So financials, again, would be lower weight compared to before. And a couple of reasons for that. One is, like the way I said, look, unlike in the past where nominal GDP was somewhere around 10 to 12, 13%, I think those numbers are going to be slightly slower, 8 to 10%. So you're limiting yourselves to select private banks, etc. One is looking at capital market plays. But if the market is range bound, I think these names, having done well for last 4-5 years, may not do anything. So maybe at decline, some of the few capital market plays, etc., the wealth managers or asset managers may be interesting. And outside banks, the capital market plays, I think insurance looks interesting here. With the cuts GST is provided, we should see uptick in their policies, and growth should come back here. So insurance names look
from the old financials to the new age, right? The big global theme is the race for compute and, data centers and all of that stuff, everything which goes into a data center, I guess. Here in India, we've got, say, old real estate player like Anantraj, which is back in the reckoning because of the data center business. You've got, some computing businesses like NetWeb, which have done very well. Anything on that front? You've got a global view, global perspective as well, Rahul.
So we are playing these AI enablers, which are the memory guys through Samsung Hynix in Korea. There are plays in Taiwan, the likes of TSMC Quanta, which are there in our portfolios. India, there are no clear-cut plays. In the past, one has seen some of the names you said get impacted by slowdown in real estate sales in the NCR region, or kind of have some delay on the execution, etc. So India, what we are playing is the AI adopters. And I think that is probably the big story over the next 6-12 months, as some of the smart Indian companies kind of use AI to increase their productivity in terms of reaching out to their end customers.
You don't think, but you've given all these a look. Some of them, they're very few, but companies trying to really sort of not just the adopters are one, the others are enablers. You think it makes sense to? I mean, you've looked and you said, well, maybe not.
Yeah, see, I think from our side, we get a better play, a more globally competitive play across Taiwan, Korea. Yeah. So I think which is why we've chosen those names. But somebody who invests solely in India will, I'm sure, look at some of the names.
Correct. Absolutely. And I think that's a good point. And that's a good, important distinction as well. Thank you very much, Rahul. Appreciate you joining us here on CNBC-TV18. Thanks for sort of running us through what you make of things here and around the world as well. We'll take a quick break, but let me just quickly run you through the interactions which are lined up here over the next 2 hours or so. 8:35, Prabal Sen of ICICI Securities will discuss the Ministry of Petroleum's pitch for high valuations for oil marketing companies. Stocks were up 4-5% yesterday. 9 o'clock, Karan Thorani, Velara Capital, talks about the impact of US imposing tariffs on movies made outside of the US that came last night. 9:20, Devina Mehra of First Global will talk markets with us. 9:35, we'll have the Chief Business Officer of Premier Energies talk to us about the company's outlook. And we have the management of Keystone Realtors talking to us at 9:45 as well. Towards the end of the program, it's the economy. Lata speaks with Somshekhar Vemuri of CRISIL Ratings and Sachin Gupta of Care Edge Ratings. K. Ravichandra of ICRA also joins in. Credit quality of Indian corporates in the first half that ends today. That's the focal point of discussion. Okay, we'll take a quick commercial break here. We're going to come back, list our top stocks with our research team on the other side.
Welcome back. So the cues across Asia are fairly mixed, and the implied open so far has been telling us that it's going to be a flattish start, and then let's see if the bulls manage to reclaim some lost ground or not. It's a little better than when we checked it last. It was about 10 points up. Now it's 20 points higher. So let's see. As always, lots of stocks and news. So let's straight away get to the CNBC-TV18 list of top stocks to watch. Nigel, you're looking at Tata Steel. What's happening here?
Well, Tata Steel's in focus. They've announced that Tata Steel Netherlands as well as the Dutch government, they have signed a joint letter with the intent to decarbonize the operations by decommissioning the existing blast furnace and transitioning to the electric arc furnace. Remember, they've done the similar exercise, which is in transition in Tata Steel UK. Now, with regard to funding, the Dutch government has indicated its support of 2 billion euros, and Tata Steel is also applying for an EU Innovation Fund of around 0.3 billion euros. So that's a broad idea about with regard to funding. Analyst feedback, well, they are saying that this development is on expected lines. It could be a 5-year project or even more. The project capacity, capex, all of that should be worked out in due course and should be at a later stage, announced. So just a development in the positive direction from the blast furnace route. They're going to be looking at moving to the EAF, that's the electric arc furnace. That's good for the environment from a shareholder's perspective. More or less on expected lines, so going with mild green, but not a big stock mover, actually. Let's go to Hormuz. He's here to tell us about Tata Motors. A lot of analyst notes came in earlier today. Hi, Hormuz. Good morning.
Morning, Nigel. And they held an analyst meet yesterday where there was some expectations that there would be some commentary with regard to the timelines for JLR resuming production. Unfortunately, that is not to be. And they've mentioned the same that they have mentioned in their earlier statements as well, that production would begin in a phased manner, although they have not disclosed when exactly would that happen. Until their last public disclosure, the production shutdown is supposed to continue until tomorrow, which is the 1st of October. And then there is no timeline forthcoming as to when resumption would take place. Now, on the JLR demand outlook, they mentioned that it is remaining tough in the near term for JLR, whether it be in Europe, China and the US markets as well when it comes to demand. But domestically, they mentioned that the GST cuts would aid the growth outlook for the PV and the CV industry in the second half of FY26. And the Iveco buyout, they have said that it will be completed by April of 2026. They mentioned that although it is EPS accretive right from the start, but it will be quote unquote meaningfully accretive in the next couple of years, is what they have mentioned. And the CV business listing is tentatively supposed to take place in the month of November. So no clarity forthcoming, and only for that reason go with some red on the stock today.
Okay, all right. Got that, Hormuz. Yeah, like we've discussed yesterday, Tata Motors has managed to make it on the list almost every single day over the past, week and a half. Thanks for that, Hormuz. Let's quickly get to Vamakshi. She's watching out for a bunch of names, including Z Entertainment, Sun TV, and Tips Industries. Does it have anything to do with US tariffs, Vamakshi?
Absolutely, should be bang on then. US President Donald Trump has actually gone ahead and announced 100% tariffs on the movies that are made outside of the US. Now, of course, there is more clarity that is needed on how this will actually be implemented, whether or not, it will be also implemented on streaming platforms like Netflix, etc. So we'll have to wait for clarity on that. But overall, it's a negative for, all of these companies. And that is because, earlier my colleague Shilpa had actually compiled some data points from industry sources. And they said that around 30 to 40% of overseas collections comes in from the US. So it's a big market. We have a huge Indian diaspora over there, and along with some other Asian communities who love watching, Indian films. Apart from that, US is the second largest market outside of Telangana for Telugu films. And in fact, almost 20 to 25% of box office collections for big ticket Telugu films comes from the US. So a higher impact is expected for Tollywood as compared to Bollywood. But now there are some likely scenarios that could play out. If this is passed on to customers, ticket prices may get expensive and the footfalls could likely get impacted. But if the producers themselves decide to absorb some amount of cost, take some cuts, so then their revenue as well as profitability could see a hit. So therefore, we'll still wait for more clarity on this. But negative for all of these counters like Z, Sun TV, Tip Films.
All right, Vamakshi, thanks a lot for joining in and giving us that piece of news. And just to tell our viewers, Vamakshi today will be moving on from CNBC-TV18. It's been an absolute pleasure, Vamakshi, working with you and learning from you as well. Wishing you all the best in the new avatar. Off to Australia, going to be getting married and breaking a lot of hearts out here. But wish you the best, Vamakshi. And as I always say, there's one better researcher that I believe it's you over the last
Thank you. Thank you so much,
Thanks a lot,
Vamakshi.
Vamakshi.
Yes.
Thank you so much. It really means a lot to me.
And I'll send you the list with regard to the treat. All right. Thanks a lot. Let's move on to Vinny, who will be facilitating that and who's had a, interesting evening of dancing the Garba, I believe. Vinny, good to see you. Bright and early, fresh as ever. Tell us about the dance later. What stocks on your radar?
Yes, absolutely. It was a great night. But Nigel, starting off with the stocks, then first let's watch out for Adani Green. We're expecting red here. Now, there's a Bloomberg Reuters report that's come in where it's saying, and this was Total Energy CEO who actually spoke to some investors. And that investor meet, he highlighted that they may sell part of the stake in Adani Green Energy. Now, do not forget, Total Energy held around 19.25% stake in Adani Green. They'd acquired 20% stake in Adani Green in 2021 for around $2 billion. Now, also the company added that they will sell the renewable power holding except those in US, Brazil as well as Europe. And quoting what they said, if I was able to sell a quarter of my shares to recoup my $2 billion and to be neutral, I would be very happy. That's the word coming in there from the investor meet highlight. We have also sent a mail to them and reached out to Adani Group, but we've still not received a response, so we'll wait out for that. Other than that, Blue Dart, let's keep an eye out on that because Blue Dart has announced a general price increase effective 1st of January 2026. Average shipment price increase could be in the range of 9 to 12%. So it's steeper price increase that we're seeing coming in. And the main reason for this price increase is because the inflationary pressures that they face, increase in terms of airlines costs as well as complexities due to the global supply chain scenario is leading to the increase in terms of price hikes. But yes, keep an eye out on this one. We're expecting some bit of a green here.
Okay, all right. Thanks a lot for that, Vinny, Vamakshi, Vinny, and now Vivek. Vivek, tell us some more stocks on the radar.
That's right. Quite a few stocks on the radar on the back of order wins. Mainly, first on the list is Bharat Electronics. Company secured and has announced that they have received orders worth over 1,092 crore. The orders includes, defense network upgrades that BL has to do, tank subsystems, communication equipment, even EAVMs is something that BL will be announcing. Remember, the company has announced to the analysts earlier that they expect orders worth 27,000 crore rupees in FY26. This is excluding the 30,000 crore QRSAM order that the company received significant visibility on last evening. Along with that, keep an eye out for DCX systems as well. The company has received orders worth almost 50 crore rupees. This order is for electronic module assemblies worth 30 crore and another order for cable and wireless harness assemblies worth 19.5 crore. And lastly, RailTel, two separate order wins for the company. The company has received a work order from Visakhapatnam Port Authority. This particular order is worth over 37 crores. This is for smart video surveillance and has also received a letter of award from Bihar Educated Project Council for a project worth a little over 50 crore. Expect all of these stocks to open in the green today.
Okay, all right. Thank you. So orders, and more orders, Vivek. Well, let's quickly recap our list of stocks to watch then. The ones that have positive news flow would be Tata Steel, Blue Dart Express, BEL, DCX Systems and RailTel. Stocks with negative news flow would be Tata Motors, Z Entertainment, Sun TV, Tips and Adani Green Energy. Okay, so that's as far as stocks are concerned. Let's figure out what's happening in commodities. Usually it's gold and silver taking away all the headlines. Manisha, morning. What's the latest?
Oh, well, yes, it continues to be gold and silver taking away all the headlines. And this time around, we're looking at very strong, important resistance levels being broken when it comes to gold. $38.50 an ounce is done and dusted with. There are mounting concerns, remember, over a looming U.S. government shutdown. The yesterday conversations between the U.S. president and congressmen did not end positive. And if that happens today as well, then you're looking at a U.S. government shutdown tomorrow. But mostly, as we've seen in history, it does work out at the 11th hour, and that's what the markets are anticipating. Having said that, it also is about the rising expectation of more Fed Reserve rate cuts. There's a 95% probability of another rate cut in October and a 65% probability in December as well. In the meanwhile, you have the gold prices up by 46% in this year, the best yearly gain since 1979. And it's not just gold. Silver is also at a new 14-year high. There is also support for many of these metals where you have copper at a 2-month high, zinc and aluminum trading very close to their 5-month highs as well. So strong support continuing in commodities today as well. What the street will want to watch out for is the U.S. jobs data, non-farm payroll numbers, ISM manufacturing data. So the next 2 or 3 days have loads of data coming in from U.S., which will impact all of these markets.
Yeah, but the government has to function for that data to be released, right? Because I think the Labour Department said that if there's a shutdown, then we're not releasing the non-farm payrolls report. So let's see. We'll find out. Thanks very much for that, Manisha, for all the details over there. With that, let's quickly move on. We have Nimesh joining in to talk about some of the most interesting brokerage notes of the morning. Nimesh, good morning. What's on your radar?
Hi, Sarvi. Good morning. So a couple of reports which stood out for me and should be in focus. The first one is Coforge. CLS has initiated coverage on the stock with a target price, outperform rating and a target price of 23.46, a potential 50% plus upside from current levels. So that's a big target price there. CLS says that Coforge is one of the top 10 IT companies in terms of revenues, as well as and 2/3 of the revenues is derived from financial services and travel vertical. They expect very strong execution from the management, and that's been the trend for the last couple of years, and that's likely to continue. And they are forecasting a revenue and a EBIT CAGR of between 15 to 16% for FY26 to FY28. So big numbers there, and on the back of strong execution and outperform rating with a target price of 23.46. That's the first name. The second stock is Indus Tower. HSBC has initiated coverage on the stock with a reduced rating and a target price of 310. A kind of an anti-consensus negative view on Indus Tower. They believe that Airtel's growth is muted, and there is a concern on Vodafone as well going forward in terms of uncertainties and growth there. They believe that at the current price, most of the bull case scenario is priced in. So that's the reason why they have a reduced rating. And at current price, the stock implies an EV/EBITDA of close to 5.5 times for FY26 and close to 5 times for FY27. So valuation captures most of the upside. So that's they have a reduced rating. And the last one is UPS putting out a note on quick commerce. They've raised the target price on both Eternal as well as on Swiggy, and they believe that there could be further positive surprises as far as earnings are concerned for the quick commerce players, and hence they've raised the target price and earning estimates as well for both Swiggy as well as for Eternal.
All right, Alimesh, thank you very much for that. The big one, of course, in terms of the upsides, and the percentage targets is of course Coforge with that 50% upside as CLSA sees it for Coforge. Ramesh, thanks very much. More later. We'll take a break. We're back. Parag Thakkar of Fort Capital joins in for some fundamental stock conversation. We'll also have Prabal Sen of ICICI Securities to talk about the OMCs, oil companies. Remember, the government's made a pitch for higher valuations here. Stay tuned.
Welcome back. Hope you're having a good morning. Well, let's get in our guests who are going to help us out with some good fundamental analysis. Parag Thakkar, Senior Fund Manager at Fort Capital, joins us on the show. And joining in is Prabal Sen, Energy Analyst at ICICI Securities. Good morning, gentlemen, and thanks a lot for joining in. Prabal, let me come across to you first. The ministers are making a solid pitch that value needs to be unlocked in these OMCs. Do you buy into that argument? To be fair, things actually have started looking up for them. Crude oil prices have stayed at lower levels. The problem is we have a couple of big elections that are coming up as well. Give and take everything. Do you buy into that pitch?
I think first I must mention it's probably for the first time that we are seeing an initiative and this awareness among the government and the ministry to actually look deeply into what are the concerns that the street has with respect to PSEs. They're working very hard at clarifying whatever perceptions, right or wrong, that people may have about the level of intervention, about the way that performance is being measured at these companies and the kind of capital allocation decisions that are being taken. So to that extent, I think it's definitely a positive that the government has an eye on the ball and they are doing their best to clear these misperceptions if at all they are there with respect to these companies. Secondly, as far as the operational environment is concerned, yes, it's a very simple rule of thumb. Oil, if it remains in a narrow range, typically is good for Indian oil and gas companies. Particularly the OMCs. It ensures that margins are not very volatile, and it also ensures that pricing power remains intact, particularly on the retail front. Coming to your point about the elections being a factor, that is something that frankly has been a case for a very long time. But if you were to look at recent examples, and when I say recent, I mean over the last 2-3 years, the limited point that I have to make is that there's not really been any significant impact or changes as far as retail fuel prices are concerned, even ahead of fairly crucial state elections. So we would like to believe that, even if there is a pricing change, it will be done within a reasonable range, and it's not something that will provide a shock to the system. And lastly, with the LPG compensation coming in, with GRMs continuing to remain stable at around $4 to $4.50 levels, on an integrated basis, our sense is that OMC margins will remain in the 6.5 rupees a litre range, which is a fairly reasonable level to sort of continue to deliver earnings growth. Despite the kind of capex that is going to be done, particularly by the likes of BPCL and IOCL. I think one structural.
Prabal, sorry, just to understand that point, when you're saying 6.5 rupees, you're talking about refining margins, or you're talking about marketing margins?
I'm talking about refining and marketing on an integrated basis.
Okay.
On a per litre basis. I think that is what is frankly what needs to be looked at.
On that, Prabal, if there is a change in the mix of the crude that India is sourcing, which is the biggest global talking point, right? Not even local. Could that materially alter your projections on the refining side? I don't know how the basket is right now, vis-a-vis if it has lesser Russian crude and we start importing more from the US, then what happens?
No, I think we've not really been building in more than 20% Russian crude, at least as far as our estimates are concerned. And we have seen over the last couple of quarters that the discount in any case has been narrowing. Compared to, let's say, periods earlier where discount was as high as, let's say, $6 or $7. What we've really seen is that the discount has narrowed to somewhere between $2 to $3. And I think that at 20% means there's a 50 to 60 cent advantage, if at all, that can actually come through. So we're not really building very aggressive sourcing mix from Russia or a huge margin advantage for that matter, because that's really the reality that we are living in right now. If the uncertainty goes away, then we'll sort of relook at the numbers.
Yeah, I mean, I think the discount has fallen, right? It used to be some $8 for Russian oil at one point. Back in 2022, it's about $2.5 now. Yeah, I mean, it's come off quite a bit. Prabal, just to take you back to, because what you started with, I think that is the trigger, which is the petroleum minister. I mean, the broad thrust is what we got to follow here, which is that the government wants these companies to trade at better valuations. I'm sure you attended that meeting as well, Prabal, right?
Yeah.
So in terms of diluting some stake in these companies, did you get a sense that perhaps that is on the anvil? Not selling anything, but bringing in more outside investors?
No, I think the thought process has changed on that. In any case, in a lot of these companies, the government shareholding is really close to what the minimum permissible limit is, number one. Number two, I think the approach that seems to be now being followed is unlocking of value in valuable subsidiaries rather than basically letting go of the family silver, for lack of a better word. At least that is the way that at least the government seems to be moving.
So no increment. So nothing new on that front, right? In that sense.
No. I think that they'll look at monetizing the subsidiaries rather than the main companies.
Yeah, and that has been what's been the stance for the last couple of years as well.
Yeah.
Now, just one more thing, Prabal. In terms of how these companies calculate GRMs, was there a specific back and forth around that about how private companies calculate GRMs and how they do it, and from maybe there is going to be these PSU OMCs also perhaps move to that way from the next quarter, and that provides a lift, just the way that it's calculated?
Not really. I don't think that there's going to be any change in terms of reporting. I think the OMCs are very clear that whatever impact of inventory is there, they would probably want to disclose the impact of under recoveries and inventory, in a much more detailed manner. If they can probably do it, I think that demand was there and it was heard by the ministry. I don't know if it's going to happen, but I don't think the reporting standards are going to change now.
All right, Prabal, let's get straight to the stocks. Top 3 buys?
In the PSU space, our pecking order remains HPCL, BPCL, and IOCL in that order. And as far as upstream is concerned, we continue to like oil. And as far as gas space is concerned, I think GAIL probably still offers value if the tariff order sort of comes through and is anywhere close to what the street is building in. And in the CGD space, we continue to like MGL and IGL in that order.
Okay, all right, got that. Let's get in Parag as well into this discussion. Parag, what's your view? I think you as well are quite positive on some of these OMCs. Which one is your pick of the pack?
Yeah, I clearly prefer BPCL. Very clear. 8 times trailing earnings. Last quarter EPS itself was 15 rupees. There is a potential to increase dividend. So dividend yield, which is right now already at 3%, will go up. And remember, the government intent has come at a time when crude oil prices are also under pressure. Yesterday itself, the Brent was down by 3%, right? Because OPEC has increased its production guidance. And I think Mr. Trump also wants oil to remain low so that US inflation remains under control. So I would say that it is all happening at a correct time. I would say stars are aligning for OMCs. And within that, I like BPCL followed by IOC in my packing order.
Prabal, we'll thank you. I think you have a hard stop. Appreciate you joining us with that. And thank you. Parag, so that's oil to begin the conversation. Let's just talk about single stocks, right? Samman Capital, Parag. A lot of news flow. I think ICICI Pru bought some 40 lakh shares yesterday. New deputy CFO, which we broke the story on, more than a few weeks ago. Have you looked at this one? I mean, the play, of course, is revamp, and maybe the earlier issues are past. It's repair and recovery from here, and there's a board meeting now as well for fundraise. I think the notice has been put up.
So I think, so a very good mutual fund has bought the stock. Of course, there was a management change, which was also positive. But up till now, we have not bought in the portfolio, so I'll refrain from commenting. Coming on the financials, my favorite stock remains ICICI Bank because of its pristine asset quality across the cycles, pristine ROA about 2%, which is right now 2.3 to 2.4%. And now, because of the FII selling, the stock has come at a very reasonable price, where PEG is less than 1. On next year basis, where the EPS is expected to be 85 rupees, X of subsidiary value of 200 rupees. The stock trades at 13.5 times on FY27 earnings, while EPS growth after the rate cut cycle is over, it will be easily 14 to 15%. Q2 will mark the bottom of growth and margins for them. And margins, remember, still are at 4.27%. So even if they come to say 4.20% on a core NIM basis, it is still a very good margin. And from there, you will see recovery as the CRR cut impact plays in and the deposit pricing plays in. Plus, you will see a GST-led demand surge in credit card spends and auto and all, where you will see recovery in ICICI Bank, HDFC Bank case also. So they will boost the credit growth in the second half. And finally, in Q4, I am expecting some kind of private sector capex also to kick in. So I would say that PEG wise, price to book by ROI wise, ICICI Bank at this oversold levels look extremely attractive. It is our top holding in the portfolio. I would like to put a disclaimer. So ICICI Bank followed by HDFC Bank, and of course PSU banks are also looking better. In Q2, I don't expect a significant margin tailwind for PSU Bank, headwind for PSU Bank. And I think valuations, again, SBI at below book, PNB at below book, with now they are also aiming for above 1% ROA. So I would like to bet on these traditional names, and which I have in a significant weight in the portfolios. Of course, the City Union Bank is another stock where 28% of the loan book is gold loan. So the margin resilience will be maximum over there. They are continuing to see above 15% growth and top class asset quality. The one common thread among all the banks names which I took is that asset quality is going to be very, very robust. Even when we saw that last 6 months to 9 months, there was a turbulence on the unsecured loan side. But all these banks have cleared that litmus test, and I would say that they stand tall right now, and the cycle is looking very better, I would say, in terms of asset quality, and growth will always come from second half, in my view.
Got it. All right, Parag, request you to just stay with us. For the time being, we'll take a mandatory break. Come back. We'll have Sudarshan and Mitesh will be joining in as well for some technical trades.
Okay, welcome back. Let's just bring in Hormuz now, who's with us with the big movers that we had yesterday. Lots of activity, single stocks, big blocks which went on. Of course, primary market action are really looking pretty solid as well. Hormuz is here. He can sort of compile this data yesterday. Hormuz, over to you.
There is this rush to go public. We've had this conversation about a lot of IPOs and the fundraising that has happened. But the question to be answered is the fact that has these IPOs resulted in any benefits for their shareholders? Well, so far the answer is no. And that's because out of the 74 main board IPOs that we have had so far, we have had 60 listings out of them. And 34 of those 60 listings have either resulted in single-digit gains or are trading below their IPO price. If you break that number down as well, 9 IPOs have single-digit gains and 25 of those listings are currently trading below their IPO price so far in 2025. And now the 24 IPOs have already opened in the month of September. One more opens today. That takes the total number to 25. And 1/3 of the IPOs that have come out in 2025 so far have resulted in have come out in the month of September. Now, it's not as if the market sentiment has been any good, and as a result of which the companies are looking to capitalize on sentiments. So take a look at this. The first quarter of calendar year 25, the Nifty was struggling. We had 9 IPOs. In fact, in the month of March, we did not have a single issue. Now, after making a tariff low in April, the index saw some recovery and the primary market activity picked up. But the third quarter, which ends today, the index is down around 3%, and today itself, including the IPO that opens today, we have had 50 issues coming out in the primary markets in the third quarter between July to September. Now, if you take a look, and the other big takeaway is the fact that a large IPO size as well. You take a look at the 10,000 crore IPO, we have had only 2 of them. HDB Financial is one, Tata Capital opens next week, and most of these IPOs, at least a third of them, are sized 500 crores or less. Now, bigger the IPO size, greater the returns. Well, Well, not really, because 3 out of the 5 biggest IPOs of the year are trading below their IPO price. In fact, HDB Financial, you see a green tick here, but in intraday yesterday, the stock had slipped below its IPO price. NSDL is the only standout here, 50% above its IPO price, but that is also significantly below its post-listing high. And in the case for JSW Cement and Schloss Bangalore as well, they continue to trade below their issue price as well. It's not as if the pipeline is over. There is a big pipeline left as well. We spoke of Tata Capital. WeWork opens later this week. There is an LG Electronics IPO lined up. There is a PhysicsWallah IPO. We heard from Prestige Estates earlier this month. They said that the Prestige Hospitality IPO is on the anvil as well, and the Hero FinCorp IPO that is lined up too. So the primary market activity continues to buzz, and it will continue to buzz in the final quarter of 2025 as well.
Okay, all right. Hormuz, thank you very much for that. Parag is with us. Parag, you saw that data which Hormuz put out. It's pouring. When it's raining, it's pouring. What do you make of it? Anything interesting out there?
So I'm not a big fan of new IPOs because I want to buy time-tested businesses and I want to buy where promoters, the balance sheet and cash flows I have understood and analyzed over the last 20 years. So I would like to say that I would like to stick to something like ICICI Bank, where Mr. Sandeep Bakshi has proven it. After he has come, he has never disappointed investors. It will continue to outperform, in my view, in terms of results. Stock price, of course, depends on FIIs. And as I told you, for a bank which is making 2.3% ROA to trade at 2.1 times just because of FII selling, and which is going to grow at 15%. I think it offers the best opportunity. Apart from that, of course, today it was highlighted in your this thing also, stocks like Coforge, where the earning growth is expected to be around about 20%. The cash flow yield is around 5%. Then I said BPCL. So then in metals, we like stock like Hindalco. So these are our best preferred stocks. And I would like to stick to the listed names where I know the history very well.
Okay, all right. Thanks a lot, Parag, for joining in, giving us all those ideas. Look forward to chatting up with you and wishing you a good day ahead. For the time being, though, we slip into a short break. Come back. Pre-open rates will be with us. Karan Tarani as well will join in of Elara Capital. He'll tell us his take with regard to Mr. Trump announcing a 100% tariff on films made outside the United States. You want to tune in this conversation.
Welcome back. So we are almost at 9 a.m. We'll start getting the pre-open rates any second now. Good time to bring in the technical experts as well and get some trading advice for the session. We have both Mitesh as well as Sudarshan with us. Gentlemen, good morning to you and greetings of Ashtami for those who are celebrating. Let's get straight away to the action with respect to the index for Sudarshan. So it couldn't really sustain any momentum yesterday. What's the call for today?
Yeah, good morning. Well, it's not supposed to sustain that momentum. What happened was that we had 3 dips and each dip had a 100-point rally. That's as much as you can expect. Now, see what this likely scenario, the preferred scenario is that the Nifty starts building a base at current levels, 100 points up, 100 points down. It doesn't matter. So I'm assuming that the scenario could work out. And that is the trade that I'm suggesting for the Nifty. Have 24,500 as your stop loss, as it was yesterday. Look for dips, buying opportunities, take profits whenever you see rallies, and keep quiet. Let the market build a base.
Okay, so buy the dips, but be nimble enough to quickly take the profits as well at peaks. That's the advice. What about you, Mitesh? Index, are you trading today in Nifty or Bank Nifty?
Good morning. See, yesterday also I was talking about the fact that the last week's decline had kind of damaged the structure on the short term. So on the upside, I think till we capture 24,900, that's the very important mark. There's a gap over there and there are some retracement levels and moving averages. I think the idea would be that we could go and retest 24,400, 350 zones. In a worst case scenario, maybe even break it. So for me, I think, yes, for the timing, you can say that 24,400 to about 24,850, 900 is the range. but there is a slightly stronger chance of us eventually breaking downside. So the way I'm approaching the markets, and yesterday also it was the same, is that we'll try and sell closer to about 24,800, 850 levels. You can sell in the futures, or you can trade via buying put options or selling call options, and possibly see if the market once again sustains 24,400. If it does that, then I think we are safe. Otherwise, we'll have some trouble.
Okay. All right, let's also get down to stocks then, gentlemen. So, Darshan, what are you trading today?
Well, it's a mixed bag. Hindalco is a buying opportunity with a stop under 740. Bank of Baroda is a buy with a stop under 249. I have two intraday shorts, Vedant, which is a sell with a stop above 461, and CESC, which is a sell with a stop above 165. But as yesterday, I would prefer the buys. I must warn traders that today, should be options expiry weekly as well as monthly. That can do very unusual things.
Oh, yes, and that caution is well taken. And I'm glad you put that reminder back on the table as well, the 30th. So watch out for the expiry-related factors. What about your stock list, Mitesh?
I have a mix of buys and sells, slightly more tilted towards the sell side. So a sell on Bharti Airtel, which is broken at short-term averages. Keep a stop at 1922. Look for targets of around 1860. Also a sell on Eternal. After a long time, there are first signs of profit booking on the charts of Eternal. So sell with a stop at 330. Look for a target of around 312 to about 310. A sell on Dr. Reddy's with a stop at about 1258 for targets of 1190. And one buy call, that's Bank of Baroda. It gave a breakout about 248, 249, completed a pullback day before yesterday, bounced back again yesterday. This could possibly head higher. So buy with a stop at 248 for targets of 266.
What was your target on internal? Sorry, Mitesh, missed that.
Yeah, about 312 to about 310.
Okay, a reason I asked is that UBS's fundamental call on Eternal today, their price target is 400. So Mitesh is also looking at more upsides. Got that. Thanks very much, gentlemen, for the trading advice. Quickly getting to Vivek now. He's watching out for the block deal action from yesterday. There were several big names. Vivek, tell us about the data.
Well, that's right. Quite a few interesting block deals in yesterday's trading session. Samman Capital, remember yesterday was a very sharp mover. ICICI Prudential Mutual Fund picked up close to 43 lakh shares in yesterday's trading session. Ather Industries, the significant names coming in over there. Amansa Holding picked up close to 12.8 lakh shares, and the seller was Goldman Sachs Equity Portfolio Fund. They sold close to 11.5 lakh shares. Two different stocks in focus. Motilal Oswal Mutual Fund picked up stake in both of these names. Bharat Forge, they picked up close to 31 lakh shares. DCX Systems, they picked up close to 7.4 lakh shares. GMR Power and Urban Infra, Rajasthan Global Securities sold close to 40 lakh shares over there. And Naib Limited, a name we don't discuss too often, but promoter has picked up, or rather up to stake over there, close to 1.7 lakh shares at 1,411 rupees. And, mostly these are stocks that will remain in focus. Fund action seen in yesterday's trading session.
Okay, all right. Thanks for that. Helpful. So we'll keep these stocks in mind as well. Thank you for that, Vivek. Let's quickly move on and address the latest tariff salvo that has been fired by US President Donald Trump. And it's coming in on the movie business. He has said that any movie that is not made in America will now attract 100% tariff. Not quite sure how the tariffs will, play out, how exactly they are going to be implemented. But could there be a hit on, of course, the Indian content that is screened in the US? Let's try and understand this better with Karan Taurani, Executive Vice President at Elara Capital. Karan, thank you very much for joining in. So every day we get a tariff missile. Now it's aimed at the movie business. You tell us your first interpretation of what this means for, like I said, there's a large Indian diaspora in the US looking to consume Indian movies, and they've been doing so for years. So what happens now?
Hi, Silvi. Morning. So firstly, there are a lot of limitations in terms of, whether or not this can be done, because this is actually more on the goods part and not on the movie. So how will you exactly impose tariff, whether it will be on the cost of the movie or whether it will be in the box office collection? A lot of lack of clarity on that front. But let's say if the tariff is imposed on the box office collection, just to give you some numbers in perspective, film industry is about a 20,000 crore market. Out of which around 8 to 10% of this market is coming from overseas box office. And within the overseas box office, US has got a reasonable share. About 35 to 40% of box office for the large marquee films is from US market. And for the smaller films, this number could be below 20% odd. But net, you can say around 25-30% of overseas market does come from US in terms of box office. Now, potentially the negative impact herein is that anyways, in terms of distributor share, largely all over the world, the arrangement is 50-50 in terms of distributor and the producer. So if the producer's earnings, kind of is at 50% of whatever that number would be, that would lead to 100% tariff, which means the earnings of a producer can get diluted over here. That's one way to, kind of look at it.
No, so you're saying that, this is going to be applied on what, the box office collections of the movie here in India? I mean, it can't be on the cost of, or will it be on the cost of the movie produced? What's your best guess at this point in time till we get the details in the tariff order?
See, it can't be on the cost of the movie produced because cost of the movie is something which is very confidential. Now the production houses or the studios do give out any cost metrics or dynamics, right? So that's the first thing. So it'll mostly happen in the form of box office only, wherein the box office revenues, the producer could be penalized in terms of whatever earnings they're having. Because eventually the earnings they're having from US market in terms of box office is the export revenue rather, which the producer would make, right? So I think that's the number where the tariff will be imposed.
So on the Karan, just breaking it down. So let's say if a movie earns, 100 crores for the sake of simplicity, Indian box office collections, and say 20 crores in US box office in terms of US box office collections. So the 100% tariff should be on 20 crores. Is that what you're saying?
Yes, absolutely. The 100% tariff will not be on 20 crores, but on the 10 crores because 10% will be retained by the US exhibitors there. So that will not be exposed to tariff. But the 10 crores which the Indian producer would make over here, that could see 100% tariff. So which means that the earnings of the producer are quite dilutive here in terms of how they're going to see a severe negative impact in terms of their earnings from this market as a whole.
Okay, so let's boil this down in terms of stocks then. I mean, what should investors be prepared for? Which names could get potentially impacted, which have a significant US exposure in terms of their slate? And there are a lot of re-releases as well that are happening. Producers or content, IP holders re-releasing older movies or earlier movies. So in terms of impact, stock-wise?
So not much of an impact for any of the stocks because, as I said, in terms of overseas box office, it's only 8-10% of the total Indian box office market. And within that, US is, let's say, 25%. So let's say US box office is merely 2 to 3% of the overall Indian box office market, which even if it sees 100% tariff or whatever, it will be a negative for the producer. But it is an avoidable situation for the producer. They can obviously, increase the exposure to other emerging markets, other markets except for United States. And so not a big impact in terms of listed entities. But yes, the producer movie economics does get challenged over here in terms of the films they make. Their earnings can get depleted by a certain margin.
So you don't see any major impact on any of the listed entities?
Not a major impact, but if you look at the case of PVR for that matter, right? So things are anyways quite shaky right now in terms of occupancy levels and very volatile. So producers which have made large budget films over the last 6 months haven't seen traction. They've made hefty losses. So in a mild manner, for example, the larger films which are also appealing globally, to the US markets and so on and so forth, could see some kind of negative impact in terms of their earnings potentially. Not much from PVR perspective in terms of a negative impact as of now.
We'll wait by to understand what's the impact with regard to what Trump is going to do concretely once we get further clarity. So we'll push that aside. For the time being, let's focus on GST 2.0 since we have you, Karan. Very quickly, if you could tell us what are the trends you're seeing on consumption and what theme you're most bullish on.
So within consumption trends, very clearly in terms of GST 2.0, whatever savings the consumer is seeing right now because of GST, a lot of the traction is coming on the high value items where the savings are higher. So I think white goods and automobiles are the ones which are seeing maximum traction as of now. Other sectors within discretionary, whether you call it the likes of online BPC, food, apparel, footwear, everything put together, is not seeing that greater traction, at least in the near term, last couple of weeks. But yes, you could see pent-up demand in the month of October because September first 3 weeks was quite weak for the entire discretionary pack. So some demand boost will definitely come because of GST 2.0. But as I mentioned, except auto and consumer durables, other discretionary items, you see the boost and growth hits in the phased manner over the next 6 to 8 months. The delta positive impact for the GST part in terms of discretionary bucket is not more than 0.2% to 1.5% in terms of revenue upgrades. So it's a very mild cheer for this discretionary basket as of now, and we'll have to wait and watch in terms of how things pan out. There are some selective companies which have seen a two-way positive impact, because one is because of the consumption boost and savings in the consumer wallet share, and some companies have also seen a revision in terms of raw materials like hair care. The GST has come off for Jubilant Foodworks or the QSR companies. The food cost has kind of come down, so there is ample cushioning for better growth because of the lower pricing which is there, which could drive volume growth for these companies. But again, this will happen in a phased manner. We don't expect that in October, November, December will be like a blockbuster quarter for this discretionary pack specifically.
Okay, so let's see, slow and steady towards maybe Q4, maybe next year Q1, when we have the full impact of the GST cuts, all the new MRPs, everything brought in, we'll know how the consumer is really reacting. Very quickly, just a clarification, Karan, before we let you go. The value that you gave, 20,000 crores, that's value of the entire Indian film industry or only Bollywood?
No, Indian film industry across genres.
Across the country. Got it. All right, thank you. Very helpful conversation. Thanks for stopping by. You have a good day. That's Karan Taurani, view of Elara, that not too much impact on the listed stocks with respect to this tariff business. Not even on PVR. Quickly getting to our 9-10 calls. Let's go back to Sudarshan. Sudarshan, what's the stock?
That's Hindalco. Buy with a stop under 740.
And Mitesh?
I'll go with a sell on Bharti Airtel for targets of around 1860.
Got it. Thanks a lot for that. Well, let's hop across to Nimesh. He's here to tell us the standout brokerage report of the day. Nimesh, take it away.
Hi, Nigel. So today's standout is in Kotak Mahindra Bank. A big report from Morgan Stanley. They have an overweight rating. They've raised the target price to 2,600 on Kotak Mahindra Bank. Morgan Stanley believes that Kotak Bank is best set to generate growth in an improving economy. And the loan book is well diversified with leverage to commercial banking, vehicle financing, as well as unsecured loans. They expect incremental spreads to improve, and that will aid to faster loan growth as well going forward. For FY27, FY27-28, Morgan Stanley expects that the core PPOP growth and EPS growth will return back to 18 to 20% by 27. So big numbers from Morgan Stanley and Kotak Mahindra Bank. So overweight rating and a target price of 2,600. This is a second big report on Kotak Mahindra Bank. Last month, UBS actually upgraded the stock to a buy as well. So positive notes coming in this time from Morgan Stanley and Kotak Mahindra Bank.
Okay. All right, Nimesh, got it. Thanks very much for that. Well, as we get to market opening, 57 points up on the Nifty. And I think we can probably just have a quick glance at the stocks. No, actually, before that, Nimesh, on Coforge as well, let's just revisit that call. You had flagged it off earlier, but that's a big one too from CLSA.
Oh, absolutely big one, right? They've initiated coverage on Coforge with a target price of 23.46, a potential 50% more than upside from current levels. They believe that it's one of the top 10 companies in terms of revenue and have a very diversified, returns as well in terms of revenue and from financial verticals and travel vertical. Look at the number for FY26, FY28. They're expecting close to 15 to 16% revenue and EBIT CAGR for Coforge. So that's the reason why a big initiating report on Coforge with a target price of 23.46, a potential more than 50% upside.
Okay, well, this is one of those. This is not a tinkering call, right, Nimesh? This is a directional call. Okay, more later. Stocks up 2% in the pre-open, and we'll have more coming up. What do we have? First, couple of seconds to, just a couple of seconds to go for market open. So we'll look at rates, then we'll get down to individual names. So the opening bell goes off about 0.25% higher, 24,680. You've got the Nifty Bank, which is up about 0.4%, 54,660. And you've got, what else? Mid-cap index up about 1/3%. The small-cap index will come up with some gains as well. So out of the gates, right at the word go, about 2:1, advances to decline, although I suspect that will change as we go along. But it's not a bad start. Back above 24,700. I mean, actually something similar to what we saw yesterday. It's just yesterday, of course, markets were not able to hold on, and there were multiple waves of selling which hit some recoveries as well, but finally we ended unchanged. That's the Nifty heat map, overwhelmingly positive. There are some stocks down in the red as well. I mean, the setup still, of course, remains the fact that at least large cap indices remain extremely oversold. So that backdrop is there, but we'll have to just see how much is in the tank for the market to even see some sustainable lift, even if we are able to remain even if you're to remain in the range, broad range for the Nifty out there. So 24,700 to begin the session. Surbhi.
Okay, let's look at the gainers. Titans had a good showing so far this week. It's only day 2, but it's looking good. 2% up. Nifty winner. Then there's Power Grid. There's Hero Moto as it makes its way out of the index. It's having a good session, at least. Good morning. 1.5% up on that one. Asian Paints, BEL, which announced some order wins. These are all your gainers. Steel stocks are looking good. Hindalco, JSW Steel. Let's check Tata Steel if it is part of this. Tata Steel also up about 0.5%. So metals are in form. Tata Consumer as well on the upside. Kotak Mahindra Bank, the stock that Nimesh was just talking about, that standout brokerage report, it's up about 0.5% at this point in time. Not too many stocks on the downside, actually. Tata Motors down about 0.5%. There's ITC and Tech Mahindra, but that's about it. I mean, the market seems to be finally in a bit of a festive morning mood, at least. Let's see if it lasts. 70 points up on the Nifty. Nigel.
Well, Man Industries, that's the stock that's getting hammered on the downside. The regulator has pulled up some of the, people some of the promoter entity and the like. So that's why, in fact, that's one stock that's getting absolutely smashed in today's trading session, down close to around, I think, 15% as we speak. The company, though, they've come out with the clarification that they're cooperating with the regulator and they're looking for a better outcome. They're maintaining that they have a good, a good order book as well. For the time being, the street is not buying into that. At the low point of the day, volumes massive. So we mentioned about Titan. Kalyan Jewellers, that's popped up in trade as well. Good uptake is what we're seeing on that particular name. The other big winner is DCX Systems. Just pull up that stock. Yesterday, it ended at the low of the day. By the end of the trading session, we got to know that Motilal Oswal was the one that sold. But they won an order. It's only 50 crores odd, but a strategic one because it's coming from an Israel company. So I guess that's why the street likes it. That stock up and about in today's trading session. Another one is Cybertech. We don't talk about it very often, but they've declared a dividend of 20 rupees or thereabouts. So I think that was one of the top gainers, Cybertech System. That stock up and about in today's trading session. Saman Capital in the F&O ban. Big fund buying yesterday. And they could be looking at raising some capital as well. Continues its good form. Friday, late in trade, we had told you that it's possibly coming out of the F&O ban. That's what happened. Now it's back in the ban. But massive action is what we saw on Monday. All those that wanted to get in have got in. And Vascon, stock opened 2% up, corrected, but that dip has got bought into, still holding with a gain of around 1.5%.
Without making it's not a comment on Samman per se, but I mean, just the broad category of the theme which is playing out in Samman, right? When there's, as they say, when stuff goes from bad to good, as I said, it's not a comment on Samman. I mean, there's a big, sometimes there is big re-rating which happens. Lots of issues. I mean, the erstwhile Samman. This was Indiabulls Housing, if you remember. But, I mean, there is, attempts afoot to turn this. And I think, ICICI Pru coming in, etc., perhaps a case in point that they're trying to attract institutional participation. I don't think there were any institutions before ICICI picked up some 42 lakh shares yesterday. So 4% on this one, 160 or so. Devina Mehra is with us, founder, chairperson and managing director at First Global. Devina, good morning. Great to have you with us here. Thanks very much for joining us. We're still stuck in the range without really a line of sight, either up or down. And no real triggers as well in that sense, right, Devina? What are your thoughts to kind of sort of kick this conversation open?
Good morning. So, yeah, I mean, because the news also has been there on both sides. So tariffs in India have been positive, which is the GST, and tariffs which President Trump has brought in has been negative. So, I mean, markets will always frustrate you one way or the other. That's the nature of markets, that they will never do what you expect them to do. And when you get frustrated is when they will suddenly do something you didn't expect. So actually, sentiment is a contraindicator. So that's what all research studies across the world say. So if I go back to July, August last year, the mood was euphoric. I mean, people would come and tell me that I don't have, and this I'm talking family offices, saying I don't have unrealistic expectations, but I'll be happy with the 30% compounding. I said that is an unrealistic expectation. So when the mood is so buoyant, and this is what studies show, the next period returns are below normal. And when everybody is anxious, asking, should I stop my SIPs? Should I get out of the market? The next period returns are above normal. And I don't see it, that I don't know when the market will move up or that it will. I'm not saying that it won't move down at all. But if you look at what you should be doing, I don't see an imminent crash. And most of the time, it helps to remain invested to the extent of your equity allocation. And again, I'm probably repeating myself, but don't have 100% in equity, even if you are young, even if you are in a good job. But whatever is your equity allocation, remain invested. This is not something you asked, Prashant, but I caught the tail end of what you were saying earlier. So not commenting on a stock, but one of the very interesting things, very large global fund manager told me. He was one of the people who coined the terms emerging market. So he's like that much of a stalwart. And he said that, and which I found in my life also, in my experience also, that the big money is always made when a company goes from bad to average, not from when it goes from good to very good. So that's actually true.
From one end to the other, but yeah, from just turn, right?
Bad to average. So
bad.
I said bad to good. You said bad to yeah. I mean, not great.
So
we both agree, not great.
Bad to good, you are better off than somebody going from good to great. So, and this is, even in cyclical industries, I have found this so often that when the turnaround in whatever the commodity price or whatever the reason for the cyclicality comes, it is the worst stocks in that business that do the best, because the cash comes in, they can pay off their loans, and there's a reflexivity. The stock price goes up, they can raise more money if required, and suddenly, if you have a 1% a net margin, if the EBITDA goes up by 2% points, it is a tripling of the net margin. Whereas the guy who was already at 10. It is only from 10 to 12%, so the percentage is not so high. So it's a very interesting phenomena, which is why I always say that, do the actual maths. Don't do upar ka ki that this will happen to margins and that will happen to profit. Do the whole exercise as to what happens to cash flows, what happens to balance sheet if this happens. And you'll see a very different scenario emerging.
Very, very interesting. That gentleman I'm guessing you're referring to would be Mr. Jim O'Neill, the father of the BRICS acronym. No, someone else. Okay. All right. Devina is not taking names. Devina, but just to go back to the earlier point that you're making, you've always made that point. Don't keep all your eggs in one basket. And this year, if any, has been such a stark reminder of that cardinal principle of investing, right? I want to get your thoughts first on gold, then we'll talk about the US market as well, where you've always, advocated a very sensible allocation. On gold, though, because it's making a lot of investors feel silly, just to see something go up 40% in 1 year. So are we at a point of excessive optimism now? There are people who are feeling major FOMO, thinking, should I now at least have a silver ETF, gold ETF? What would you say?
I would say be very careful. I saw a headline somewhere saying that gold has not seen this kind of rally since 1979. That's the last time it saw this kind of rally. So I said, let's go forward from 1979 and see what happens. And gold made a high in dollar terms in 1980. And thereafter, if I go from 1980 to 1999, 19 years, imagine what the return on that investment in gold was.
So that doesn't answer my question. Buy or not buy now? Those who bought are super happy. They're waiting for a bumper Diwali. The ones who didn't allocate enough are wondering, what did I do this year?
I'm just coming to that. So it came down 62% from that high. So the 1980 price of gold was not crossed till 2007. For 27 years, it was underwater. Going down 62%, as I said, in the interim. The next high, it came down 40%. So if you look at the dollar chart of gold, it has been more volatile than equities. Gold has been more volatile than the S&P 500. So it's no safe haven. In rupees, the chart looks good. So even the time that the dollar price went down 60% over 19 years, it tripled in rupee terms because rupee has been depreciating. So at that time, the gold was the only way to get kind of overseas exposure. But now you're not stuck to gold. So now it is in frothy territory. I'm not saying it may or may not go up. But this is the time when you get FOMO is when you enter at the wrong time, because usually that asset has had a huge run up. Everybody on the street knows about it. And then when you get it, it is dangerous. So have some gold in your asset allocation, but it should not be 25-30%. And yes, we have added silver also, because silver is looking good compared to gold. And silver also has industrial usage, and with the renewables, that is one area where silver is used. So actually, in terms of industrial demand, also silver has been going up. Coming to the other part of your question, which was on global allocation. So suddenly, because the Indian market has not been doing very well, people have started thinking global. But number one, you said I asked people to go for US allocation. No, I don't. I always say global. US is not the world. That's the number one thing to remember. US has been outperforming for a very long time. Doesn't mean it will always outperform. Since January in our global funds, in fact, we've been underweight US. We've been overweight Europe. So till June, July, of course, Europe had huge outperformance. Now US has done a bit better in the last couple of months. And we've been overweight China since last year. So you have to make these tactical reallocations. Unfortunately, because now suddenly India has not been doing well, people are talking global. A lot of people with no global expertise whatsoever are positioning themselves as global experts. So beware of that.
Hi, Devina. Good to see you. And the point on gold, there are a few periods that I went back, 45 years or thereabouts in terms of data. 1980 to 1986, gold didn't move much. 1992 to 2002, I think it didn't move that much, in terms of, I think, percentage terms, it was some double digits across all those years. And 2012 to 2019, that's the time when it didn't move too much. But in the last 1 year, that's been the asset to go forward. That said, Devina, let's talk about equities. Give us a couple of stocks with all due disclosures that y'all are very, very bullish at this juncture. Couple of stocks, if you could name it, please.
So let me tell you this, that recently one of the bigger banks asked us that, which are your high conviction bets? And I sent them a 3-page note on why, in principle, we do not have high conviction bets. Because what is a high conviction bet? That you bought into a story, you're married to a stock. That's the last thing we want to do. So we have a very diversified portfolio in our PMS. In fact, even in our small case, we typically have 25-30 stocks. And so it's across industries. So it is really, I'm not making a big bet on a single stock ever. That's not something I do. So where we are overweight has been since last year. So now almost, 1.5 years plus has been pharma, healthcare, auto components. We've added a couple of auto companies in the last rebalance. What has increased and become overweight in 2025 has been FMCG. After that, of course, there have been individual stock picks, something in chemicals, etc. Banks, we are not overweight, but we are holding more than what we typically hold, because banking as a sector, after many, many years of underperformance, is doing better this year. So that would be the broad strokes. But our PMS is called India Super 50 because we hold 50-55 stocks. So it's not like a 1 or 2 stock bet. And no one knows the future. So never tell yourself that I know the long-term future of this company, whether it is HDFC Bank or Amazon or Titan, or even the management could not have told you the 20-30-year trajectory.
What are the newest things you've done in this portfolio, Devina, if I were to put it like that?
So this year, more FMCG companies have been coming up. So as I said, this year we have become overweight in FMCG. We've added a couple more of the auto stocks. We already held auto. So that is, and as I said, we've also added to banking this year. Now, of course, now that the quarter is ending, now we will be looking at everything once from base zero. So we forget about what we hold and we look at, if we had cash today, where would we invest? Of course, typically from one quarter to the other, 85-90% of the list is the same. But as a discipline, it is very important to tell yourself that, because there's something called endowment bias, where you overvalue what you hold. So I say the hold rating exists only because of endowment bias, because if you see objectively anything you won't buy today, you should not be holding.
Yeah, absolutely. Devina, since you have a global perspective, you've looked at other markets and what's happened, bigger trends, etc., right? You got to, obviously you do apply some of that to, what happens sometimes, not always, but you got to use that knowledge in the Indian context as well. A lot of trends are global in that sense, right?
Right.
And in a variety of businesses, and there are companies, for example, in logistics where stuff which has happened globally, and these are newer businesses, relatively newer listings in that sense. Of course, in compute and AI, etc., we don't have very much, but we have a couple which, of course, now are trading at 50 times forward earnings, etc. So valuations perhaps are a bit of an issue. What else? I mean, you got a few construction, for example, prefab stuff. I mean, is there? Do you kind of sort of actively look at some of this stuff? Because you got there's the old economy, banking and consumer and FMCG. I mean, that'll continue, and it's got to be a part of the portfolio. But these are more niche businesses where you've got to be careful, but makes sense to look at them, doesn't it?
See, anything new is high risk. So if you look at new technologies, I read the farewell column of a technology columnist after 40 years of writing that column. And he said, I can just go back and say so many technologies were launched with great fanfare, which went nowhere. So 3D televisions, Google Glass, Apple Car, and I can go on. So one is that which technology will succeed? How long will it take to succeed? We think, electric vehicles is something new. Reva car was launched, I think, 23 or 24 years ago in India, I'm talking about. I'm not even talking globally. So which technology will succeed? If it succeeds, which company will succeed? Will it make enough return on capital? That's the other part. So if I go back to the internet boom, there was this thing that whoever wins, we'll need the internet's infrastructure. We'll need things going across continents. So there was this company called Global Crossing.
Yes.
Which laid on the
famous case.
Yes,
Absolutely. No, that's a very famous case. My question is not that, Devina. My question is proven stuff outside, which is happening here now. This is not stuff which is...
AI, what is proven stuff?
Not AI. I'm not talking about AI. AI just gave an example. I'm talking about, something. I'm not naming names because you don't want to name names and you don't want, you can't.
Recently, there was this study on where how these AI models were being used.
Yeah.
And during summer vacation, 70% of the usage went down.
I know that.
So something you might invest in. And now to be in the game, you have to invest. You have to invest in the data centers. You have to invest in the AI. You are hiring people, individual people at 100 million, 200 million, $500 million. But will the market pay the return? So global profit example was only that infrastructure was required, but you will not get a return on capital on that. So that's the part which is hard. And a technology that succeeds can still be a graveyard for investors. Automobiles and aviation from the 20th century are like poster child for that they changed the way the human beings live, but they didn't make returns for the investors. So be very careful. The story is very interesting at any point in time. Again, data centers. What is data center? When you set up a data center, what is it? It's a lot of real estate, a lot of equipment which depreciates very quickly, a lot of power and energy. So that is
absolutely. Sometimes I feel, Prashant, Devina was listening into her as well. Sometimes I feel maybe on a lighter note, it's easier to sell more complex stories, right? If you're selling, if you have to convince investors about a toothpaste business, 100 questions are going to be asked, right? But it's data centers, it's some voodoo.
दिन में कितने बार brush करते हो?
But it's new age tech which has not been proven. Maybe it's easier to sell in the hype era. We are in the hype era. How it ends, we will all find out. I think in a couple of years.
I think absolutely what Devina is saying, absolutely completely cautionary advice, absolutely good stuff. And maybe this is not the platform, Devina, but maybe we can invite you back on maybe some other program and we can go into some of this detail, right? Because this is interesting stuff. It doesn't apply to here and now, this stock or that stock. But I think as how you think about some of these things. I think it's important to debate and discuss. Thank you very much, Devina, for joining us.
Thank you. Thank
Great
you for
speaking with you. Really appreciate your time here on CNBC TV18. I think we'll just look at that, right? Markets were up 70, they're up about 30 now. So like yesterday, this is just the start, not being able to hold on. 24,660 is where we are at. I just want to quickly highlight one or two names. There's Blue Dart and there's All Cargo, All Cargo Gati, which is in focus. Mangalam is here to tell us why. Mangalam, over to you.
Well, both these stocks are buzzing in today's trading session, and there are a couple of reasons for the same. The first one, obviously, is Blue Dart has, as an annual exercise, announced their price hike as well, which is usually to the tune of 9 to 12%, so no different from what the company typically does, at the end of September every year. So that's something that the street has been anticipating. And All Cargo Gati has also gone ahead and done that. But the good part is, because of the GST cuts and the boost on consumption, etc., and the early indications that we have from, Amazon's sales and Flipkart Big Billion Days sales, that e-commerce activity is picking up, especially ahead of the festive season. So all these factors working for these solutions providers for e-commerce logistics in this quarter. But come January, you will have an effective price increase between 9 to 12%. The company usually gives their clients a quarter to go ahead and, intimate them that there is a 9 to 10% price increase, so that there leaves some room for negotiation. The important part is what the stocks do between these two announcements, because if you look at it, over the last 12 months or so, Blue Dart from the highs has seen a correction. All Cargo Gati too hasn't seen a big rise in the stock price. So the price move has come on account of the price hike that the company has announced, but delivery, literally and figuratively, on those price announcements and their impact on the revenues is something that the street will be tracking over the longer course of time.
Okay, all right, Mangalam. Thanks a lot for that. Well, let's move on then, and let's invite our next management. Premier Energies has signed a near $20 million solar power contract in West Africa. We have with us Mr. Vinay Rustagi, the Chief Business Officer at Premier Energies, who joins us on the show. Hi, Vinay. Good morning. Thanks a lot for joining in. Coming across to you. For the time being, just highlighting the three broad points that we're going to be looking at. The rationale behind the West Africa foray. And is it a one-time, or are there more such forays planned? Point number two, the impact of the lower GST on renewable sector. And finally, the outlook of Indian module prices amidst the rise in capacity. Well, Vinay, good to have you on the show, sir. I recall earlier you had said that your focus is going to be more domestic in nature, and you don't have much capacity for exports. So tell us more about this African foray. What kind of capex will be required from your end? Is this the one-off, or do you have more plans to get into the global arena?
Well, thanks for having me. And you're right, we did say that for us, the focus in the short run is the Indian market. Having said that, we have to bear in mind that today India is one of the largest and the most competitive manufacturer of solar panels in the world after China. The domestic manufacturing ecosystem is growing very strongly, partly because thanks to the government's support for Make in India. And as we grow our capacities and capabilities, it is imperative for us to look for new growth opportunities. And hence, you will see us tapping into markets in Africa and other countries around the world to find new opportunities for us.
But could you tell us, in terms of the investment, initially you mentioned around $20 million. What kind of an asset turn will you be looking at in terms of these markets? How big can the pie get? Some broad outlook in terms of the total quantum you're looking to spend and how much you're looking to penetrate into that market.
See, in terms of the outlook, the money that we're going to spend on this, it is going to come out of our existing operational capacity. So there is no capex involved. The $20 million number that you refer to is the order value. And this order value comprises installation of some rooftop solar systems, solar heaters, as well as solar street lights. It will all come out of our existing production lines in India. And there is no new net incremental capex involved for us. Yes. In terms of the market size, like I said, solar is booming around the world. Africa is a great opportunity, particularly as the country has very low penetration of power. And off-grid and new distributed solar systems are going to be instrumental in electrifying most of the continent. So hence, we are looking at that opportunity out of India. But in terms of new capex, there is nothing as yet.
You know, I just did a quick search through in terms of competition in Africa, and that's what I really want to, understand. So, Vinay, there are players like Scatec, EDF Renewables, First Solar, which is US, EDF is French, for the benefit of our viewers. The Italians are there, ENEL, Green Power, etc. So, the who's already reached Africa, right? I mean, in terms of just trying to gain some market share, give us a roadmap. Say, over the next 3 years, how much of your business will continue to come in from India? How much will you target Africa? And will you at all look at the US? Though the US has enough issues of its own in terms of tariffs, very high regulation. But I don't know, since you're looking global, will you look towards the US at all?
So I think there are many issues that you covered in your question. So let me try to address them. So when you talk about players like Scatec and other European players and maybe people from China coming into Africa, that's absolutely right. But the sector has a very distinct, I would say, three-part value chain. One is the project developers. These are large companies who are setting up mainly ground-mounted projects, and that is where Scatec and some of the other big majors from around the world are focusing on. Second part is the EPC, which is people are just buying the equipment and installing these systems. And the third part is the equipment supply. Equipment supply is where there is a massive shortage in Africa. And most of the equipment is imported from other countries, including China and India. And that is the market that we are really focusing on. So as far as we see, there is not too much competition other than, I would say, China. And hence, we are kind of really trying to see with the government support if we can find a good, attractive market, which does open up a new growth opportunity for us. So I think that is the outlook in comparison to Africa and how we are focusing on that market. There was an earlier question about GST. So I think in terms of GST, I think it is a very good move for the entire sector.
Vinay, just 1 second. Sorry, to complete the Africa point.
Sure.
So when you have to compete with the Chinese in that international market, typically when you compete with the Chinese on anything, the competition comes down to lowest cost pricing. So is that an arena that you can compete in effectively at all and yet retain profitability and decent margins? I mean, what will be the margin of your Africa business vis-a-vis your India business? Again, I'm not talking about immediate. I'm talking about a 2-year roadmap or 3-year roadmap.
So I think in terms of the competition, you're right. The direct competition is with China. But then, there are ways to open up that market, particularly with the government support. The government has various tools in terms of trade treaties, developmental aid, and Exim Bank financing, etc., which can open up a very attractive opportunity for India. And that is what we are mainly looking at. So Africa does need a lot of developmental aid. The Indian government has a very good relationship with many of the countries across Africa. So we are hoping that with the government's help, we can open up this market. And in terms of pricing and margins, so the overall pricing and margins for us are largely in line with the current business in India and overall very attractive, meeting our threshold returns. Your other question was about what is the 3-year outlook for us. So I think it's very difficult to say right now. We are looking at the US market as well, but obviously there is a short-term uncertainty because of the 50% tariffs. Plus, there is a new anti-dumping duty petition which has been filed in the US against imports from India. So I think there is a short-term uncertainty. But again, as you would know, the Indian government is trying to sign a free trade agreement with the US, and there are expectations that some of these tariff levels will be reduced, ultimately again opening up the US market as well. So the long-term outlook for the Indian exports, I would say, is attractive because as we are growing capacities, the cost of production is coming down, and solar demand is growing everywhere in the world.
Vinay, can I come in? Morning. Did you watch President Trump's speech at the UN? Did you hear?
I did. Yes, I'm aware of that.
So, I mean, of course, that is. So he said, a completely full-throttled attack, right, on the what he called the green energy agenda, dismissing wind, solar as costly, unreliable, return to fossil fuels, nuclear, calling carbon footprint a hoax, and warning other countries like Europe, etc., that their energy policies are a disaster. Now, there is, of course, a tariff bit in the US, but there is, of course, I think the bigger issue, tariff is just a manifestation of the underlying policy and the fact that they don't like all this stuff, right? At least for the next 3.5 years. 3.5 years later, we'll see whatever happens. But even with regards to Africa, Vinay, I'm assuming a lot of aid comes from US. I mean, US is the capital of the world, right? And a lot of aid flows through those channels. Even multilateral organizations. US has been the largest donor historically for and these are all technologies where you need a lot of government support for adoption, and then they become self-sustaining. Isn't this a problem then?
So, let's take the US market. I think there is at the top level, there is some governmental resistance to renewables, but I think the overall picture for renewables, even in the US, remains very compelling. So if you look at the demand, there is a strong demand outlook because the end consumers, whether it is the IT companies, the industry, the retail consumer, the households, they still want solar solutions because this is the most competitive source of power. So we do expect the demand for solar to stay. Maybe there will be some small blips here and there. But overall, I think the market kind of is still growing in our view. And hence we are kind of looking at that market. When it comes to, Africa, you're right. There are various competing players, whether it is the US, China, or India. I think India has to find its own path in the continent.
No, Vinay, my question is specific. Funding for projects, I mean, governments are, there are developmental organizations fund a lot of this, right? Because countries there are poor. And they are, so isn't that is funding going to be an issue at all? Because the source of the largest amount of capital is the US. And there is a very specific targeted crackdown on many of this stuff now.
So, I'm not sure if US is the largest funder over there, but I think the Indian government also is very keen to work with the African nations to find an export market for Indian products. India is giving developmental aid to many of these countries, and the best example is our project in Benin, where the aid is coming from India in the form of cheaper financing for these products. So I think India is also the founder of India International Solar Alliance, which is a body which comprises over 40 nations from Africa. We are undertaking initiatives to reduce the cost of solar equipment for the African consumers. So I think India can still play an important role in the growth of solar power in the continent.
No, I wish you all the best of luck. I mean, we need more renewable power despite what President Trump says. And, that speech, the carbon footprint is a hoax. I mean, I don't know what to say to that, what to make of it. But anyway, it is what it is, at least for the next 3.5 years. And we've got to sort of navigate through some of this stuff. Thank you for joining us here, Vinay. I appreciate your time. Sorry, you were saying something, Vinay?
No, I said thanks for having me.
All right, thank you very much. We'll come back. Keystone Realtors on demand trends here in Bombay and outside on the other side. Stay with us.
Welcome back. So the market continues to drift along, 30 points up. Not too much of a major move either up or down. That's what we have for the time being. We're putting the spotlight on now the real estate space, and the company on our radar is Keystone Realtors, and we have Bowman Rustamirani, Chairman and Managing Director of the company, joining in. Bowman, always a pleasure to have you in. Thanks so much to talk about. So I just want to quickly lay it out for our viewers just to focus the conversation. Now, 3 key talking points. Number one, of course, we want to understand the impact of the GST cuts on cement and how that flows into the real estate sector. Of course, we need to understand some concerns, particularly in the super premium luxury segments. There is some chatter about a plateau, perhaps, in demand. So let's see what Bowman has to say on that. And then, of course, redevelopment, where Keystone is very, very active. We'll find out what the latest is, especially in Mumbai. So, Bowman, there you have it, the questions, or rather the themes laid out for you. Let's first start with GST. That's the good news, right? On cement coming down lower. How does it sort of improve things for you? Will some of it be passed on? I mean, I don't know, it won't have a material impact on the end price of a house, but just what does the cut mean for the industry and for the end buyer?
I thank you for having me on your show, and I must say that this season, which comes along in Q2 and now continues in Q3, with regards to festivities in India, become a prime time for people to buy new stuff, whether it's cars, whether it's homes, and we are seeing this trend work out much stronger this year, given the fact that GST rate cuts almost came in at a time when to improve the mood, the buying mood of the people. And we've seen the impact, on the 22nd itself, we saw the walk-ins increase. I must say the only thing that's played a dampener in the whole thing, and pun intended, was the rains. Weekends are generally when people are walking in to buy new homes, check out availability, etc. And we've had a washed out weekend last as well as, the earlier one. So, save and except that, I am very optimistic about the Diwali season, which is going to be in October this year. And we've observed that every year when Diwali comes in early, it actually makes for a bumper sale for homes as well. And our teams are gearing up more for the mid-mass and the aspiration category. Also, the premium category has seen a great amount of demand. I must tell you that the GST impact has led to a feel-good factor amongst people. The buying power or the belief that their buying power has improved and prices have been brought down are helping. On the real estate front, GST has been cut down on cement from 28 to 18. I can tell you most of the Mumbai developers, we use RMC concrete, and over there it was always 18%. So really no impact on that. And the other area where the impact will be seen is marble blocks and granite blocks. We'll have to wait for our suppliers because we buy them, in cut to size, etc. And over there's been no change in the GST. So we'll just have to wait as to what is passed on to us. But what I can tell you is that the consumer durables or the air conditioners, the washing machines, all of these price reductions will definitely make the adornment of the homes a lot better and will impact our home buyers. So every home has, I would say, even if you have a 3-bedroom or a 2-bedroom, you'll have about 4 air conditioners, even 2 in a hall and then 1 each.
No, absolutely. And, even on ACs, the reduction is 10%. So it really, really helps when you're doing up a new house or even refurbishing your current house. But the other point, and it's interesting to note, you're sounding as optimistic as ever. And you're saying that even in the premium, at the premium end of the spectrum, there is as much excitement, because I saw some reports and some chatter, and I was speaking to some fund managers on the mutual fund side, and they were saying that they're picking up some hints of some sort of a plateau in excitement or, demand at the super luxury end. But you're saying that is not to be noticed, at least not in Mumbai, is it?
I'll tell you, it's exactly the opposite. And basically, Mumbai homes, if you take an average price, they're between the 17 and 30,000 rupee bracket, right? It's homes in prime locations, Bandra, maybe Juhu, maybe South Mumbai, certain areas of Worli. All of these is where you see prices going from 50,000 all the way up to 100,000 rupees and maybe even higher, which is what we keep seeing in the papers time and again. Actually, there has been a very strong upswing in demand for the luxury and uber luxury, and I'd like to define these as 7 crore to 15 crore and then above kind of homes. As a matter of fact, the demand has improved, has increased. And like I told you, our sales teams give us feedback that basically, if not for the rains, the last 2 weekends, you would have seen a bumper Q2, but now we are waiting for Q3 because all of this will spill over into Q3, and Diwali being a very auspicious time to make or buy a home is also going to assist this process. So, au contraire, you are not seeing any kind of a slowdown in the Uber.
You're saying it's the other, it's the other way, which is you're saying it's accelerating. That is interesting.
Yes, it's true, but I'll tell you, the overall unit sales have gone down to 97,000 versus 107,000. Mumbai and Pune account for still about 48% of the unit sales. And overall, while there's the...
What percentage, Baman, sorry, what percentage of your portfolio is in that, not the 7 crore price mark?
So now, again, a difficult question because we are having many launches come up this year. We kind of did project acquisitions or launches of about 4,000 crores in the first quarter itself. And we've seen a very strong surge in demand in homes that were launched in the Bandra area. So that gives me the confidence that this continues to be a growing segment. And we've also continued to do extremely well in our Mahim sales. There's 180 Bayview, Mahim Matunga sales have done extremely well. Our Versova launch, which is like, again, a premium segment because it's on the water, has seen a great amount of demand and buy.
Can I? It's an unfair question to ask you because even you are developing these specific projects and they're doing very well. But broadly, I mean, and I've asked you this before, how much of this boom that we saw was related to the wealth effect from stocks going up over the last few years, and stocks now have been flat for the last 1 year. Broadly, I mean, they've been big wealth creators as well, but on a broad basis, as some of this runs off in terms of marquee projects, Matunga, for example, is the area which did not have very many high rises. They're coming up now, so it's like a cluster-specific thing. Bandra perhaps is another one, but in terms of direction of travel, Boman, will the pace slow down if just because of the fact that markets have not done well?
I don't have any data that points in that direction, quite honestly. As a matter of fact, all the feedback that comes to me from my team as well as other teams in and around Mumbai, even yesterday I was visiting a fellow developer's high-end development in Burley, and they were pleased as punch about the sales. As a matter of fact, they were telling me that the larger apartments, which would obviously make them a little more expensive, are the ones that are selling out faster, and they're even converting some of the smaller apartments, joining them together and making them larger apartments and selling. So really, I have no answer for you that points in the direction where you're stating about a slowdown.
Maybe it's all the stock sales. Maybe it's all the.
That is something you and I can both debate about, But I've said this before, and I'll say it again. Not only am I seeing buyers from Mumbai buying, I'm also seeing in it, especially these high net worth or high price areas or the high value areas, I'm seeing buyers coming in from all across the country and buying in Mumbai. And if you open the papers on any given day, you've seen the kind of sales that have taken place, in the Andheri belt recently by a developer who came in from Delhi, and they've done phenomenally well, and they're looking at a lot more in this area. We're saying that we are seeing the same kind of results, and I think it's only a matter of a few days. This quarter will also announce itself. And all the listed players who are doing the larger developments will also have a similar story to say.
Okay, all right, Mr. Rani, we appreciate you joining in. You're sounding very gung-ho about demand going ahead as well. And thanks a lot for the suggestion with regard to the BSA 650. I tried the bike out. Quite impressed by it. Thanks a lot. Catch you soon. Thanks a lot, Mr. Rani.
Thank you, Nigel.
Have a good day ahead. Well, let's get back to markets. We have Vinay Rajani, the senior technical and derivative analyst who joins us on the show. Hi, Vinay. Good to have you back on the show. Tell us, what do you make of today's trading action? The good news is, at least it appears that the bulls are giving it a bit of a fight, and we are hoping to break that losing streak. How would you trade the index?
Yeah, good morning. So a more than 800 points fall in the Nifty. As far as today's trade is concerned, today I can see that breadth of the market has been quite strong since morning, and many stocks and sectors are performing like we are in a bull market. If we see the movement of PSU banks and some of the metal stocks, some of the PSU stocks, as well as some oil and gas sectors. So 3-4 sectors are showing the sign of bullishness. Breadth of the market is improving. Nifty seems a bit oversold, though we have not got any reversal sign on the charts of the Nifty. But there was a bank Nifty reversal pattern yesterday on the daily chart. That was a long leg doji candlestick pattern in the bank Nifty. And FMCG, which was not performing, now started recovering from the lower level. So it might happen that Nifty might take a pause in the overall downtrend, because Nifty has been falling for 7 consecutive sessions, and now many stocks and sectors have started performing. So I think there could be a consolidation in Nifty. But stock specific, I am bullish for the day. It might happen that PSU banks and metals can do well. So stock specific bullishness can be expected from the market, and I don't see any broad-based market selling in the from here right now. At least we can expect a pullback. As far as Nifty support is concerned, we believe that 24,600 to 24,500 is a very strong base. So that should not break immediately at least. So we can expect some pullback or consolidation in the Nifty, but stock specific, yes, we are bullish for the day.
Okay, got it. What about stock specific action?
So as I said, our view on the PSU Bank is bullish. So Bank of Baroda, which has actually shown a great amount of resilience in this current downfall of the market. So Bank of Baroda is looking strong on the charts around 259. One can go long. I would suggest a trading stop loss at 255. On the upside, I'm expecting a target of 267. The second pick I would pick from the metal space, Hindustan Zinc. So Hindustan Zinc is looking strong, and it has recently broken out from the consolidation and now trading above the key moving averages. So 475 is the rate around which one can go long. I would stop loss should be 467. And immediate target I can see on the chart is around 490. So Hindustan Zinc and Bank of Baroda with the mentioned stop losses.
Thanks a lot for joining us and giving us those quick calls, Vinay. Well, we have a few listings that just came up for you on the screen. I think we should get some of them up for you. I think let's get a few of them. Yeah, we have the debutant coming in from Anand Rathi Group, another stock that's listed. I think that had a mild positive gain out there. Solar World Energy. The solar EPC player, that in fact has a gain of closer around 1 to 2%. So a flattish start is what you're seeing. Sai Tech, we'll have the management shortly with us in the next half hour or so. That one in fact has listed, I think, more or less flattish with a mild negative bias. But Anand Rathi share, that's up close around 5%. And that's the big listing, the thumbs up listing of the morning, now up close around 6%. Well, let's move on then. The RBI's MPC will announce its interest rate decision tomorrow. Ritu's with us to tell us the key expectations. Ritu?
From tariff tensions to GST cuts, a stronger than expected growth print, and even the potential fallout of H-1B visa restrictions on service exports, there's plenty that's weighing on the Monetary Policy Committee's mind as it gears up for its rate decision. According to a CNBC-TV18 poll, though, the RBI is expected to keep the repo rate unchanged at 5.5% in this policy, despite having the headroom to cut because of the lower inflation, and a very small majority is expecting a 25 basis point cut. Now, with the RBI having already front-loaded rate cuts ensuring ample liquidity, the majority of the respondents we spoke to believe that the MPC may prefer to pause this stage and assess the full impact of US tariffs and GST cuts before it takes any further action. On the terminal policy rate, 40% see it settling at 5.25%, another 30% at 5%, and the rest expected at the current levels. Now, the majority anticipates that the easing cycle is going to conclude as early as October itself. The stance of the policy that is also unlikely to be tinkered with at this juncture. As for the macro forecast, 40% expect the growth forecast to be left unchanged, while the rest are expecting a 20 to 30 basis point upward revision, which will reflect the stronger than expected Q1 data. The inflation forecast is expected to be lowered, on the other hand, to about 2.5 to 2.7%, helped by lower food prices and, of course, the GST rate rationalization. Now, beyond the action itself, the language of the policy is going to be very important this time. A dovish tilt is what is expected, which could hint at future rate moves. Now, on the rupee specifically, economists don't really expect an explicit mention of levels, but the RBI is likely to stress that it will not tolerate volatility, stepping in only to smoothen the moves. Now, Forex intervention will have liquidity implications, and therefore the MPC is going to have to weigh that carefully. What else to watch out for in this policy? Well, targeted support for exporters, especially the MSMEs, any sector-specific easing where tariff pressures could bite, possible external benchmark-linked rate extension to NBFCs apart from banks, assurance of ample liquidity, and a clear forward guidance.
Okay. All right, Ritu, thank you very much for that. Watching out for the RBI announcement tomorrow. We'll take a break right now. On the other side, we'll have Manisha join in with the latest from the commodity markets. Welcome back. Well, the equity market is having a quiet morning. Let's figure out what's happening with the commodities. We have Manisha. Actually, Manisha, I think beyond commodities, she's tracking the rains. And Mumbai has been saying, rain, rain, go away. Manisha, is it going away?
No, it's not. But I'll come to Mumbai slightly later. Let me tell you that this is the most important season for agriculture, for farmers as well, because 70% of Indian rain happens between June to September. Now, interestingly, officially the monsoon ends on 30th of September, and I'm assuming that date is going to be changed very soon in coming few years, because this time around as well, we saw the onset of monsoon delayed, and that is the reason the outgoing or the exit of monsoon also is going to be slightly delayed in that sense. But we do follow 1st January to 30th of September. Today is 30th of September. Officially, monsoon ends today. The dates I have is until 29th of September. So all India is 8% in excess, 108% of long period average. And that's exactly the number that IMD had put out in their revised forecast. So that's exactly what we are standing at right now. The only concern has been in the east and northeast. That is where we have seen deficiency of 20%. But apart from that, it has been a good monsoon across other states. Northwest, 27% higher. Central India, 15%. And the southern peninsula also is ending with 10% of excess rains for this season here. Now look at the deficient rains here, and that basically was in Arunachal Pradesh, minus 41%, and then you had Bihar as well with 31% of a decline in overall rains. But the excess states are quite a bit. You have Rajasthan with 60% more rain, Punjab 42%, and then you had 40%, 39 to 40 for Himachal and Marathwada as well. Maharashtra, of course, has been a bit of a concern with various areas in mid-Maharashtra as well. Now, interestingly, when you look at the monsoon this time around, all 4 months were excess monsoon months. So we started with June, and that was 9% above average. You had 5% above average for the months of July and August, and September until now has been 15% more than average. So the mean median of that is 8% above axis. So 108% is how we get that. Now, when you look at the monsoon in last many years, 94% was in 2023, which is normal or below normal. But apart from that, the last 5 years in that sense have given you above normal monsoon. So it has been great going when it comes to the Indian markets there. Now, above average monsoon in all 4 months is quite a rarity, by the way. 2025 is one such year where you have above normal monsoon every month of this season. And the last time you saw that was in 2007, and then it was in 1975. And then 1961, 1956. So since 1950, if you start looking at data from 1950 onwards, it has been only these years that have seen above average monsoon in all of those months. Interestingly, now when you look at Mumbai and monsoons, IMD has moved dates that happened last couple of years itself, that the withdrawal date was shifted from 29th September to 8th of October. But this time around, in this year, IMD says that monsoon withdrawal from Mumbai would happen on 15th of October. Apart from that, when you look at the September rains itself, well, average really is at around 341 mm. For the month of September this year, Mumbai has seen 607. So we're looking at really high, almost double of monsoon that we usually get in Mumbai. Now, what's coming is even more interesting because you have more low-pressure areas being formed all over Bay of Bengal, and that would bring more rains into Mumbai, Konkan, Gujarat, and some parts of Maharashtra. This would be between 4th to 6th October. So is the monsoon withdrawing? No, it's not. It's exactly what I told you. Another very important thing to note out going forward is that La Nina is setting, and it is setting during October to December period. Now, what does it mean for India? Remember, La Nina means different things for different countries. But for India, it means stronger monsoon. So October to December, those winter rains that we talk about are going to be stronger this time around. And the other thing is colder, harsher winters is something that India could be prepared for as well, is what we're looking at now between October to Jan. Actually, there are some reports which suggest that Jan 2026 could be one of the harshest winters that many parts of India perhaps would be looking at.
Well, forewarned. Manisha, thank you very much for that. I really appreciate it. That's a pretty sort of good look, a comprehensive look at the monsoon retreat, but of course, I mean, a wetter October, January, as Manisha pointed out as well. We'll take a quick commercial break here. On the other side is the economy. Lata in conversation with a bunch of experts, Somsekhar Vemuri of CRISIL, Sachin Gupta of Care Edge Ratings, K. Ravichandran of ICRA on credit quality of Indian corporates in the first half that ends today. Stay tuned, coming up.